If you ask any expert technical analyst how important is support and resistance, everybody will tell you support and resistance is the most important thing which they pay attention to whenever they take a trade. Because support and resistance helps you to determine the correct entry, target and stop loss whenever you take a trade. This acts as the main key levels in which there can be a change in the movement of stock in the stock market. In this video, we'll be understanding what is support and resistance, and we will also be seeing different types of support and resistance in the stock market. Let's see the definition of support and resistance, and then let us understand this with an example. Okay? So what is support and resistance? In the stock market technical analysis, support and resistance are certain predetermined levels of price of a security at which it is through that price it will tend to stop and reverse. These levels are denoted by multiple touches of price without breakthrough of the level. So did we understand? Now let us understand this definition with a simple example. Now traders, watch this example closely. Let's say the stock came down and from this level for the first time it went up. After this, when it comes down and touches the same level and bounces back, this level acts as a support zone, okay? Because at this level, the buyers are not allowing the market to go down. They are pushing the stock price up. That means at this level, there are buyers who's willing to buy the stock at this price, okay? From this level, the stock went up. Again at this level, let's say the stock price came down. For the second time, it bounced, right? So at this level, we will say that this is a resistance level. This is the support level and this is the resistance level. Like this, the stock movement will be between the support and resistance level until and unless there is a breakdown or breakout. In this case, the buyers won and the stock went up, right? So when it comes for this level, we can mark our resistance level. So this became the resistance level and the previous resistance level became the support level because the stock broke this level. So now when the market came down, it took support at the previous resistance level, which is now acting as a support level. And then when the market went up, came down and broke the support level, now this level can act as the resistance level. The sellers are taking charge and trying to push the market down here. So there are more sellers at this level. So this becomes a resistance level. So what we need to understand is in the stock market, there are two players. One is the buyer and the other one is sellers. When buyers push the market up at a certain level, that level becomes the support zone. And when the sellers sell the stock at certain level continuously, that becomes the resistance zone. Okay, now that we have understood what is support and resistance, let us now see the different types of support and resistance level. Traders, in the stock market, support and resistance level can either be static or dynamic. Any support and resistance line which do not change over time can be considered as static support and resistance level. They are fixed level and do not change over time. For example, Fibonacci level, round number trend line, and psychological level are some of the static support and resistance example. But price level do not trade in static world only. Price rise and fall in real time, breaking out the key support and resistance level, oftentimes making new highs and lows where there is no history because price have never been there. This is where dynamic support and resistance come into play. They tend to evolve over time and change when the price changes. Moving average and channel pattern are some of the examples of dynamic support and resistance level. Let us see some examples for static support and resistance level.
I'm using Bank Nifty as an example, 3 minutes time frame. So what I'll be doing now is I'm going to use Fibonacci retracement as it's an example for static support and resistance level. Since the market is going down, Fibonacci has to be used from the top. So from here till here, if I take the Fibonacci level, we can see that 0.78 level has become a strong resistance level. Can you see how many times the market tried to breach this level? But it was unable to breach. So finally, the support level, which was 0.618 level, was broken, and then the market smoothly went down. After the fall, the market took a strong support at 0.23 level. Can you see? 1, 2, 3, 4. The market tried 4 times to breach 0.23 level, but it was unsuccessful. Once the buyers gained power here, they tried to push the market up. It broke the 0.38 level, which was the resistance level. Can you see how many times it resisted? Once the resistance level broke, the market smoothly went and took support at 0.168 level. 0.16 level is a strong level because if this level is breached, then there is a higher chances of trend reversal. But just within 10 minutes, the sellers came in control and pushed the market down. And here 0.38 level became a strong resistance level. Later, once that was broken, it smoothly went down and it took support at 0.23 level. 0.23 level was the support level and 0.38 level was the resistance level. Once the buyers were unable to cross this level, the market went down, breaking the 0.23 level. Here you can see how beautifully the market is respecting the Fibonacci retracement, and all the levels of Fibonacci retracement is acting as a strong support and level. Here it acted as a support level, here it acted as a resistance level. Once this level is broken, this becomes the support level and this level becomes the resistance level. Once this level is broken, this becomes the support. Can you see how the market took support here? And the next level becomes the resistance level. So this was just the first example of static support and resistance level. You can find a lot of trading opportunities using support and resistance level using the Fibonacci tool. Now traders, let me know in the comment section if you are interested in learning a new strategy using Fibonacci retracement. If more people are showing interest, I'll be more than happy to make a video on that. Now let us see our next examples of static support and resistance level. Here, can you see the Bank Nifty taking support at 29,000 level? Once the sellers could not breach this level, this acted as a strong support level. Even previously you can see how many times it is touched here. The next level was 31,000. So from 29,000 to 31,000 was a strong resistance level. Once this level was broken, 31,600 was a strong support level. Once this level was broken, 32,600. The similarity between all this is it is round numbers. 29,000, 31,000, 31,600, 32,600. So this levels like 100, 200, that is what we call as round numbers, right? These round numbers can act as a strong support or resistance level. Here 29,000 was resistance level before. Once that was broken, it became the support level, and 31,000 was a strong resistance level. Can you see how many times the market tried to breach this level, but the sellers pushed the market down? Once the buyers were able to beat the psychological level at 31,600, 31,600 was a strong resistance level. Once this was broken, 32,600 became a strong resistance level. Can you see how many times the market tried to breach this level? And now again the market today is come to 31,600 level. This can act as a strong support level, and 32,600 can act as a strong resistance level. Once any of these two levels are broken, there will be a smooth movement towards the downside, if it breaks 31,600 level, if it breaks 32,600 level, it has a potential to smoothly move upwards. Apart from round numbers, there can be other psychological level which can act as a strong support and resistance. I'm taking LNT as an example, daily time frame, to explain this to you. If you see here, 1115.48 is acting as a strong support level here. The market tried 1, 2, 3, 4 times to break this level and go down. However, that was not possible. There might be a lot of reasons for this. One of the main reasons can be this is an accumulation zone. We know a big mutual fund companies or banks do not purchase the stock at a short. For example, they might buy some stocks here. Once again the price come down to this level, they will accumulate. Again, when the market goes up and down, again they accumulate. These big mutual fund companies do not do emotional trading. They have mathematical calculations, formulas, and other tools which they use to do trading, right? So this can be a strong accumulation zone. So now this level becomes a psychological level for other traders who is watching the market. So this can act as a strong support zone. Likewise, if we see here, the previous high of LNT before it went down was 1387 rupees. Now when it's coming for the second time from past 6 to 7 days, this level is acting as a strong resistance level, because this is how human psychology is. Previously at this level the market went down, so a lot of people will hesitate and they will short their position thinking this can happen again. But if the psychological level is broken, then the next level, that is this level 1493, can become a strong resistance level, because previously the market went down at this level. I hope this is clear to you. So these were some example of static support and resistance level. Now let's see some of the examples for dynamic support and resistance level. Now traders, I have taken Nifty 50 as an example, 5-minute time frame, to show you some examples of dynamic support and resistance level. If you see, I have drawn a trend line like this. We can clearly see how the market is respecting this trend line. This is for a downtrend. Now today's market, if we see, after this trend line was broken, after a small bounce, we can see the market making higher lows and higher highs. The market is still is an uptrend. So this trend line is acting as a strong support zone. If Nifty 50 breaks this level and come down, there are high chances for the market to smoothly go down. The main reason we call it dynamic support and resistance level is because most of the time, if the prices have not reached a certain amount previously in the past, trendline can act as a strong support and resistance level. In our price action lecture series course, we have clearly showed how to make use of trendline, how to draw trendline, and we have given you 6 price action strategies which you can use to find buying and selling opportunities in the stock market. If you are interested, the link is in description. You can go ahead and purchase the course. So back to the video. So our first example is trendline. This was our first example. We clearly see how trendline in the live market is acting as a strong support zone. Now let's see a second example. Now our second example for dynamic support and resistance is moving average. This indicator acts as a dynamic support and resistance level. For example, this is a chart of Asian Paints 5 minutes time frame. During a downtrend, we can clearly see that the moving average indicator is acting as a strong resistance level. Can you see? Likewise, when there is an uptrend, moving average is acting as a strong support level. This is an example of dynamic support and resistance level because the moving average movement is dynamic according to the price movement in the market. One more type of dynamic support and resistance is channel pattern. This is a Nifty 50 chart, 3 minutes time frame for the date 19th Jan 2021. That is today. Can you see how nicely this line is acting as a support line and this line is acting as a resistance line? This is a channel pattern for a uptrend. If you see, this is a downtrend channel pattern. Here, this line is acting as the resistance level and this line is acting as a support level. Now traders, these were some of the examples of static and dynamic support and resistance level in the stock market. Anyone who's doing technical analysis for intraday and swing trading, it's very important that you know the support and resistance level before you enter the trade, because this will help you to determine the exact entry, target and stop losses. By knowing proper support and resistance level, you can exit the trade before the stock reverses and make a new movement. Traders, now that's all for this video. If you want to learn a new strategy using support and resistance, let me know in the comment section. And finally, if you think this video was helpful, please like, share, subscribe and don't forget to press the bell icon. That's all for this video. I'll see you in the next one.